All right, what's going on, guys? This is going to be the weekly scan for February 26th into February or March 1st. So we're leading into March at the end of the week, and the first day of March would be Friday this week. And I'm going to talk about the names that we're going to be trading and looking at, or at least what I will be looking at, and why I'm looking at those names, and kind of how I'm preparing myself for the new month and the end of February. So let's get into it. First of all, what I want to talk about is the decent range that we have to play with potentially for downside. I would position myself in potential puts if we were to catch some sort of lower high, right? And the failure being beneath this spot right over here, 434, 435 is the range in which I think is very pivotal. And this little spot over here kind of needs to be held for some sort of daily high or low and in progression, right? And if not, I'll be kind of risk off within the entirety of this bull gap. I'm not really too sure exactly what the rotations will be in terms of where the money's going to be flowing to this week. I will have to say Apple's at a very pivotal spot on this chart as well, and that's the first chart that I kind of want to go over. Obviously, guys, we had some sort of sequence of at least just reaccumulation right here for the time being, right? And it's still kind of giving me that vibe, right? But and when we talk about price covered over time, effort versus result, guys, I mean we had this earnings gap down and then this immediate recovery and rip higher on really heavy volume, very fluent, very wide spread candle with a close near the upper extremes of the candle itself, right? Just a small wick off of it that was momentarily kind of just rejecting this progression point from over here, 186, and then from there is where we saw the follow through with a bidder for the next day, putting in a low a day off that spot, and then a continuation higher. That continuation higher kind of being into this swing high from September 1st, right, into September 2nd. That was also the earning. That was the bear earnings gap back in August, right? Early August sell-off, right? We retrace back into that spot. We get a discounted type of retracement, and then from there, that's whenever we start selling off again, right? So, um, you look back at the structure over here, and you're going to tell yourself a couple things, right? Off, obviously, we have price covered over time, 6.5% coverage in 5 days, 3 trading days, wait, it looks like 4 trading days, but yeah, it's still a really good tool to show yourself the perspective of really who has the stronger hand of the name for the time being, from a price covered over time aspect, and that would be bulls here. Now, are they going to follow through, right? You got to think about almost like ammunition, ammunition usage, right? Who's using their ammo and where is it being used at, and is it being used efficiently? And I think that's what we're going to be seeing soon. Obviously, we have the 185 to 186 spot to really pivot off of, right? So what I mean by that is kind of from here into here, right? This is a little range, I think, where if they start carrying out and developing structure above this zone and it shows relative strength above the zone, then that would be where I would see a valid higher low. Although, guys, this is a technically an outside bar on the daily perspective with a shaved top and almost a shaved bottom with little to no buy wick off of it. When you go into like your 15 or your hourly chart, we did have some wicks extending and building into close, right? We had one here, and then lower lows were kind of bought up into the close, right? But nonetheless, guys, it's a bearish day, right? It's a day where sellers have most of the control, right? Could there be a climax building in the name off of this little sequence here? Totally, right? Totally, 100%. But yet again, this is why the new weeks, this is why my Mondays are light, is because I want to get a feel for the overall tape within the support range down here. And I ultimately, guys, want to get an overall feel for I want to get an overall feel for the tape, but I also want to see what happens off of Thursday's low. There was a very big dark pull into close on Apple, but yet again, I don't really care. I want to say it was something ridiculous. Um, I I want to say I had um, Apple kind of being where I would rather have structure really develop off this spot. Uh, it's not something, like I said, I want to get a feel for the tape into Monday. I don't want to front run and speculate anything that's going to happen with Apple. I'd rather the structure, like I said, really just develop for itself, give me a little bit maybe worse of a fill, but more of a confirmation, right? Because nobody really knows anything over here. Now, in terms of upside targets, in terms of a relief in the support, anything like that, right? We obviously have this unfilled gap up here. That would be a spot in which I would like to think that they would probably go for another lower high if they were to carry out another one. It would be from here, lower high, right, lower high, um, and then probably another one within the confines over here at this gap. I will be watching that, and I think if they fail to do so, then we probably could see some sort of bullish type of setup. Um, I do want to talk a little bit about uh, the current high or low potentially being attempted or lower high being attempted right now. Obviously, we have this swing high, right? Whenever you carry this through and you look at the touch points off of this trend line, you're going to notice how we put in a lower high, we put in a micro lower high, and then we obviously got this climax downwards with wicks off the bottoms, right? And then we obviously bounced down here. We left this low untouched. That's technically a very slight higher low. And then we are continuing out micro higher low structure, now trying to put in potentially a lower high with a failure to break above the Thursday high, potentially a lower high from a daily perspective in this spot. Like I said, guys, I'd be risk off if the trade were to be a call side trade. I would probably be taking most of my profits if I were to be in calls leading into that 187 spot. So that's kind of just my plan with Apple. I'm going to let this one develop. I don't necessarily have such a strong read and bias on it for now, but it's in the confines of a range that I would like to trade that would offer me good risk to reward. Bearish trade, I would like it to be up here, or maybe a retest into this range, and then find a lower high, I guess, from this high early week, midweek, and then obviously this being some sort of bearish trade if a bid can't step up for a higher low and this thing maybe wants to dig lower. Um, Obviously, with the overall structure, with the price covered over time, with the wicks at the at the lows down here, with low of days being kind of untouched, um, and kind of consecutive bar by bar hammers and reversal favoring type of candles, I probably want to look long. But yet again, this bearish outside bar really has my attention, and it isn't necessarily such a long it's not necessarily such a guaranteed long side trade. Um, so let's get into the next name that I'm watching, that being Microsoft. Okay, so Microsoft has the same little concept, right? I guess you could call this a current active sequence of distribution. I'm not a big fan of the volume, right? So this is not a trade. Like I said, I come into a Monday. I don't blindly short this if I have a bias on it into a Monday. And I don't blindly trade in the midst of a bear gap and confines of a range that I don't necessarily see myself having such of an edge off of, right? So sorry, I need to drink that water. Okay, so what's the plan for Microsoft, right? We have a very given range with internal liquidity sitting from, oh man, 410 into 40 like 4. Well, I'm not going to count that one down there. That was more or less just the preliminary buyer that came in with the current lower today that they established after that CPI gap down, that failure to hold above here, the CPI gap down, and then the three subsequent inside bars, followed by obviously the draw lower, drawing liquidity into this unfilled bull gap, I'm sorry. And then we obviously put in a lower day off the bull gap that was unfilled. We filled, and then CPI came out, or not C, what am I saying? CPI is over here. Nvidia report came out, exploded us higher, heavy volume, right? But that's, obviously a reaction to, that's obviously somewhat of a reaction to Nvidia. That's a little bit of like a Nvidia help. I'll cover AMD here in a minute. But what I'm really interested in, guys, is seeing the digestion and the activity, and if a bid is willing to step it up here, because I don't see necessarily why one would want to. Obviously, we got a very, very, very bearish type of reaction closing at the lows on the earnings report, right? We were probably drawing lower into this unfilled gap. We might have been even trying to target down into these three consecutive wicks, right? That kind of based here at 394, but we never quite got there. If you go to your 4-hour chart, you're going to notice how we kind of put in relative equal lows, this one being in the after hours. And then obviously there was a buyer that came in after such a beatdown that sent this thing higher. And then we obviously carried out the active sequence of distribution stemming from the preliminary type of resistance that we identified up here. We created some internal liquidity. We obviously had supply kind of playing a little bit passive, waiting on that those higher prices leading into that CPI report, right? They get into new price discovery. The same party looking to probably sell will probably look to sell in price discovery. Like I said, the market creates a heavier auction with more of a result whenever you're getting into these events that are heavily traded. Obviously, sellers took control over here, or buyers backed up. And then we obviously saw the CPI gap down, right? Current low put in, bouncing off of internal range lows, right? We get the relief. We get a ton of internal weaker liquidity built within here that obviously results in probably a draw lower into the bear gap. That's where we took the trade. Obviously de-risked ourselves over here. I'm getting a Discord call that I can't answer just yet. And then obviously sorry about that, guys. And then obviously the bull gap being filled, and then we obviously get our gap higher. Now, what happened on Friday is the vibe that I'm kind of getting that carries along with the overall daily sequence, and that being the bear gap. Um, Bear gap being off of 415, bear gap also kind of filling, and then obviously we get a very bidless tape into that. I don't see a lot of accumulation in the Friday action, but yet again, tape shifts can happen into Mondays. Very self-explanatory. So I'm gonna give this time to really start giving me. I'm gonna get a feel for the tape, and then I'm gonna trade it. Um, and then yeah, that's about it for tech. I could go over the AMD chart real quick, guys. We obviously saw this post OPEX major volume increase after the tech OPEX passed by, which is obviously an anomaly, right? If you're getting a major volume increase after tech OPEX, that is an anomaly. That's something that is a little bit shady in terms of effort versus result when you go from a clean, obviously volume weighted time is much. It creates very, very, very strong moves with a lot more velocity behind them, if that makes sense. In the Thanksgiving into Christmas window, you obviously have a lot of that Vanna charm effect in the market that's pushing things higher into the January expiration. That's exactly what we had here. And then post OPEX, we kind of had this major, major, major window of heavy volume. Right? There's a lot of volume here when you take this from a uh, when you take this from, comparing the start of the start of January into the midst of January was kind of where that, and then this was the OPEX candle right here, guys, right over here. This is the breakout candle. This is January OPEX. That's when all the expiration happened in a lot of that in a lot of tech. And here we are, right? This is where we kind of dry up, or where we should dry up, and then we just stay with this really heavy volume post OPEX that starts on January 22nd. Okay, and that's our first distributive type of bar. We then get like a very like dry higher low, not really any relevant higher low, and then we continue our way higher, and then we unload, we chop, right? We take out the previous dry higher lows low, if that makes sense, right here, and then we just start getting these neutral spread bars on really heavy volume, and then subsequent pushes higher on really low volume, and then the volume starts dying. We get obviously like a heavy volume sell, minus 4.7% on the day. We take out all of these lows down here, or at least this current most local low, and then we obviously base that. The Nvidia report comes out with a very positive reaction. A lot of volume on that, consider obviously because this is a semi name, but we're in a range in which I think there is at least an attempt of distribution. Now, is that attempt of distribution, is it could have failed distribution happen? 100%, guys. A failed distribution is a thing in financial markets, and it's what we're really doing is we're kind of just trading with big money. We're trading with the chart, and we're trading with what who is creating a shift, and what looks to be effort versus result, right? We're getting a lot of effort in the volume. We're getting very little result, oftentimes with such a trend higher and a passive supply. You're going to see higher highs that fail to sustain a strong buyer to hold a previous resistance, right? And then obviously that creates a denial in terms of the buy side, right? So they start turning into profit takers. Okay, I don't need to explain distribution. I just want to talk about how the volume kind of stayed very heavy at the upper extremes post January OPEX. Typically, things will ideally dry up in indexes, right? But AMD stayed very active in terms of post OPEX volume. Here's post OPEX window in the indices, right? Very low volume all the way into January 31st, and then we start picking things up. That's also the FOMC candle, so not necessarily a big deal. And I'm not saying that this major volume increase with little to no results going to, it's not going to result in necessarily such a complete phase of distribution. If you look at this from the weekly chart perspective, yes, we could see higher highs to come that are unloaded, and that's why I'll react at the upper extremes. I'll react at higher highs. I'm personally not going to be a guy chasing calls here. And I'm personally probably only going to be focusing short. I don't need to catch another leg higher in the semis. It's just not part of my edge. I trade what I see, and what I see is obviously a red flag, and I will let the distribution play out and come to me rather than speculating and front running it. I need to see the confirmation. I need to see the party in control and who's active, right? Who's active, and who's going to pull out. Um, and I think we'll see that within the next week or two or three. And it's going to provide a good trade opportunity if the distribution sequence does continue. So, that's my tech setups. I went over Apple, Microsoft, Amazon. Not really going to get into a lot of data that I look at. We're just simply talking about technicals in the chart itself. I do want to head into just my secondary focuses, kind of just in my peripheral vision, if that makes sense. Obviously, we had a major forward spring action, I would call it almost. Not, I mean, not necessarily, but let's just say this, guys. A terminal shakeout and a said range of support, whenever you bleed beneath consecutive, you have an external low right here, right? And then you get a relatively strong bid that stalls at this head and shoulders at this high. And then what do is you just build all of this internal liquidity from a weekly perspective, literally for how many fucking weeks, man? 314 days. Oh my gosh. Terrible. Okay, so internal liquidity built, external low, right? What do we have to do if you don't see a sustainable bid to push this up above the previous internal highs for then a break higher, right? You're probably going to see a draw to take out all of these lows and test a range of new liquidity where you could see more of a willing buyer looking to step up to the plate and obviously carry things higher from there, right? No sustainable bid up here. Well, then, if you're not catching a higher low in imbalance, then it's going to take out all these lows, right? And with this much of an external or internal support that was built, was obviously the recipe for a false breakdown, and then we get a matching volume buy candle, and then from there we start looking at retests on really low volume, suggesting that sellers are really running dry out of their, like I like to call it, ammunition, and then we get the rip higher, right? That's an earnings report, pretty much just price delivery to reaccumulate at these lows. We double bottom and then we recover and we rip higher. A lot of these previous shorts that were in the name oversaturated are kind of squeezed out through here, and then we carry through with a higher low that retests into this heavy volume pivot candle, right? That also reclaimed and kind of broke the short-term structure of the earnings candle high. My allergies are fucking horrible, my lord. So what am I really trying to get to, guys? That the sequence is relatively bullish. I don't really know a lot about Ford. I don't know if there's anything coming up with Ford, but all I want to talk about is this heavy volume gap up, earnings candle, potential peg in play, power earnings gap, and then what am I looking at? Obviously, this the entirety of the gap fill. I don't really use EMAs. We are trading below the EMAs. We did have a sell into the close Friday, but yet again, I'm going to give myself just a little window here and just look for a buy signal. A heavy volume pop, an outlier type of move to obviously revisit probably back into like this support breakdown along with this swing high, something like that. If I could catch it lower, right, and then take a long side position where, say it even just happens down here. It doesn't have to happen at the gap fill. I'd like to ideally see bids kind of defend this, but we would still be looking at like a dude, come on, I don't magnet. We'd still be looking at potentially like a 3R trade, like a 4R trade. I could be a little bit more lenient and call it a 2.7R trade. It's not a bad trade if I get with the overall sequence, if I can get some sort of signal over here. Definitely not bad at all. Volume really dried up after the earnings pop, right, on heavy volume. Obviously a very nice move for Ford on the day, 6%. What was the numbers? They actually did smash their revenue. I don't really give a fuck, but yeah. Alrighty, let's take off all these little dog shit squiggly FinTwit lines and let's get into the next one. Oh my gosh, I never charted this one. I'm sorry, guys. I charted it on a different layout. This is not my actual chart. Let me just please get rid of that before my brain starts bleeding. Let's just talk about this one real quick, and then we're going to dive deeper into. All right, so let's just here. We got obviously a swing high back in where do we get the S&P introduction? I don't even really remember, nor do I care. But I don't mind this one, right? Let's go to the weekly. Alrighty, so it's a little bit of a breakout trade, right? And obviously higher highs within this weekly type of sequence. They are selling them off, right? They're selling them off, and from a larger, much, much, much larger time frame perspective, what are they doing here? By the way, guys, I want to talk about this real quick. We did just reclaim IPO. Is that IPO? Yeah. So we're pivoting on heavy volume and a nice volume pop along with a this is a, I oh man I feel like such a nerd when I say this. Like this level doesn't really mean anything, guys, but it's IPO and we're getting heavy volume pops off of it, even on like a Okay, they did beat their revenue, but who cares? Heavy volume pops. The volume sequences are just bullish. We obviously got a nice, really fluent type of candle here on January 26th. Heavy volume on it, and then dry volume digestion in between. Obviously, this was a resistance, so that's quite healthy considering and suggesting that we could be a path of least resistance, right? Obviously, supply could be moving its way upwards into this previous trading range all the way over here. Obviously, they have been failing totally to kind of defend this previous support that was established back in 2022, the entirety of 2022 actually, right? And then we reclaimed it and we saw a heavier bid step in with heavy volume, uh, a double bottom down here, and then subsequently, like I said, as you reach into your resistance, you're getting these heavy volume pops, followed by low volume digestion, right? Heavy volume attempts at these highs. Obviously, we gap down and cool off, and then a recovery and just keep stabbing at that resistance. I think it's going to break, right? What's my trigger level? It's going to be 155. So I'm watching calls above 155 on Airbnb. If I were to play this a little bit passively, I'd be looking at the gap fill down here, 149.26. There's a couple levels that I have in store for this. Not necessarily a trade that I need to take from on a weekly expiration, but yeah, I mean, I would really like to see the inside bars low held. Obviously, we could kind of see some sort of bid within here, kind of defending like just the 150 psych, I guess you could call it. You could take it down to here, in the midst of the gap. I don't know. I mean, guys, the window's not that big that I'm talking about, right? It's a $1 range of execution that we have in store here, and then obviously the trigger for the breakout trade would be 155, this inside bar high, or just like this swing high. I mean, it doesn't really matter as long as you're, you know, patiently waiting, not randomly slapping it off the open. And then I'm just gonna obviously keep my risk tolerance very, very tight if I get any leeway on my position. So that's the Airbnb chart. Nothing too special. I want to go over ARKK real quick, and then we'll wrap things up. Here's ARKK. It's an inside bar. We got a very heavy volume pop, right? We obviously caught a nice 4% move on Roblox after filling the earnings gap, right? And then from there, what do we have in store for us? We have obviously a resistance that was built into Friday off of the earnings candle low. And the only reason, guys, that I have some of these names on focus and on watch is because, like, guys, like I don't need to trade everything on my watch list. Like I can find the rotation and accordingly adjust my watch list based off the rotations, based off where the money is for the week, for the month, whatever it is. I could narrow my focus down into a couple names. And that's what you guys got to understand. Like I'm not like I don't have 17 eyeballs where I can just trade. Like I can, but like is that necessarily good trading? Like I mean, not really. I'm gonna be quite honest with you. So yeah, that's that. I mean, there's really not much to it, man. It's a simple inside bar rejecting the earnings candle low. I didn't really look over ARKK too much from a weekly perspective. Obviously, this has seen such an extensive rally higher. We obviously got the pullback, the higher low, the pop, the push into the bear gap, the rejection off the bear gap. Not to mention, left a little bit of it unfilled. Not saying I'm bullish on ARKK by any means, right? But we're in a range of total digestion that I can't really get a read on yet. So just gonna let it play out, right? And Roblox will be the primary long focus if we do catch ARKK. Continued theme, I don't know. I can't really remember data wise if it was market up vol up like this one. Dealers were chasing price on this move, causing, you know, major extensive strong pushes higher in the IWM. I don't know. I can't remember if ARKK was like that, but Yeah, so and then we obviously have Oxy, right? I've been talking a lot about the oil rotation. We have this path of least resistance kind of building after the support loss over here. There's your preliminary resistance, and then you push back into the bear gap, right? You reject, you fall. Every single low was kind of accumulated into the window of post OPEX, and I think they were positioning for that. And then obviously, like here we are, like boom. And I knew this rotation would happen. Like I said it like a million times. Boom, boom, boom. Rip higher, higher low. Uh, Defending the bear gap that they reclaimed. And then digestion, digestion, digestion. Major signal bar expansion out of internal liquidity. Internal liquidity was building for, potentially a soak of supply and supply getting a little bit laying off the gas up here, and then obviously we're catching kind of like I don't know. I mean this is a decent structure kind of carrying out in this resistance. So it's something still on the table, and then we obviously got the pullback in this little 2-day cool off period here. Discounted entry off this candle. If you want to, you could take the Friday high. That's or I'm sorry, the gap high. That's kind of what we were looking at. This is kind of like your level that they're defending. And then, yeah, we're kind of just looking for follow through above these highs here. Friday's low day was kind of put in place with it being a retest of the previous resistance, turning into now maybe a support. What I would like to see is 186, 186.20-ish, like just that general spot showing us a strong, willing bid, looking to bid up the oil sector, along with obviously like Oxy catching a little bit of follow through. I wouldn't mind a little bit of a pullback on Oxy. When you're looking at your expansion candle, I wouldn't mind like 59, 59.60, something like that. 59.60, maybe at lows 58.50. Obviously, this is a very, very, very good looking chart in terms of a volume perspective. In terms of, I'm not a big trendline guy, but we built a very tight consolidation into expansion, into pullbacks. I mean, I don't really like the volume on that candle, but like it's drying up. It's drying up for sure. I don't know. I mean, I would like lower than this low because I don't know if it's ready here. But the XLE sector, the sector fund, the overall sector itself, it's going to tell me what the deal is, and we'll see. INTC, if chips were to start showing off the distribution that I think we're in, I would be looking at it. Nah, I'm not even going to look at that. Fuck that one. I'm not shorting an inside bar when there's support here. I mean, I could if I caught leeway on my contracts and tossed a trailing on it directly at where I entered so I don't lose, but I'm all right. I don't need that. I mean, I might throw it on my focus list if I really 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 like it. Tesla, terrible range, but it's kind of balancing out after this bullish candle into the bear gap, and then we stalled at these highs. Now I think it's up for grabs personally. I mean, a higher low would come relatively soon if it were to, but yet again, I'm not touching it. And then obviously like Nvidia on the table. Price target upgrade, low volume, float higher, reversal candle, uh, and then market waiting on CP, or is that CPI? I don't know. And then another price target upgrade, blood retest of gap, earnings, sell off, almost matching volume to earnings. Not sure yet. I think there's someone indefinitely getting out that's big. But yeah, that's that, guys. That's the weekly scan. I'll probably update you guys in the Discord relatively soon.